Today I bring you face to face with V. Vishwanand, who's the Deputy Managing Director at Max Life Insurance, and we're going to talk about the importance of term insurance in your life.
I joined this company as a founder team member. The purpose of our company is to inspire people to increase the value of their life. And my purpose today of engaging with you is to ensure that we try to change the narrative around life insurance from why insurance to wow insurance.
Wonderful meeting you, Vishy. It's great to see you, and a very happy new year. And I hope you insure many, many more lives this year as well.
Thank you, Vivek, and welcome to our office.
Thank you very much. Lots of questions. So let's get started.
Sure.
Most financial planners say that term insurance is probably one of the first financial products that you should really buy. And yet, if we look at the journey of term insurance in India, I think while we've been more obsessed about buying investment-related products, you know, the money-back policies, if you go back to the time when you started your career, are you seeing a change in behavior? Are you seeing people today saying that, okay, look, I need the pure term cover as much as probably, if not more, than what I need to, say, get my investments in place?
That's very interesting you brought this up, Vivek. A personal story. The first insurance policy that I bought was when I was 21. The one who sold me that policy was my dad, who got a friendly agent, and I bought a money-back plan. And it lasted for 10 years. And after 10 years, I realized I had a 3-year-old son, and I had zero cover. And that's when I joined Max Life, and I realized, oh God, what have I bought, and why have I bought that? And the value of term insurance really fell upon me like a thunderbolt. But interestingly today, as we in the last 20 years of the private sector, we're finding that the customer pull for term has really gone up multifold. I remember in our first 5 years, our pure term sales used to be less than 2%. Less than 2%. But today, nearly 3 out of 10 policies that we sell are term plans. So the kind of increase that we've been seeing is 10 to 15 times what it used to be even a decade ago.
But the reason for that was that because of the low ticket sizes, right? The commissions that were paid out were way less than what it was, say, for a money back or an endowment or subsequently a ULIP. How has that changed?
Actually, that's not true. The commissions have been quite the same. The big difference that we see is that the market pull for term insurance has been increasing with rising affluence of India. And that is a very interesting phenomenon. Not just that, even millennials, we are finding that their share of term plans compared to the Gen X segment of those above 40 is double. Which means that there is a greater demand among today's millennials to purchase pure protection plans rather than their preceding generation or Gen X.
And why has that happened according to you?
More awareness, the financial inclusion agenda of the government, digitalization, and now today if you need information, you don't need to contact your trusted family advisor or even your chartered accountant. You can trust your phone. And your search engines, Google, will tell you more and provide you neutral information about this. And we're finding that millennials are actually adopting this technique of referring their financial decisions through a smartphone coming out in a big way.
One of the big challenges that term insurance faced was that, unlike, say, a money back that you talked about, where even though maybe your return was 5 or 6%, but somewhere you had something coming back to you, right? So you felt that, oh, I'm getting something back. And I guess we Indians, when we put in an investment, we want to see something coming back to us. Is that something that has changed with term cover? Because I see newer products emerging now where if you've, for example, lived till 80 or 90 or 95, you will at some point get some money back as well, part of your investments. Has that kind of taken off in a big way?
Actually, there is a plethora of product variants, even in term segment today, and that has really helped in build the market. So the customer is able to make a fair comparison. For instance, you can buy a regular pay term. Let's say you buy a term plan till age 80, and you're starting at 40. So you can buy a term plan and pay regularly at the same level premium for the next 40 years. Or you can choose an option to pay for 5 years or 10 years, or you can choose an option to pay till you retire, which is to age 60, and thereafter your cover will still continue, or you can even prefer a return of premium plan, which means that for 40 years you will get the cover, and at the end of the 40th year, or when you turn 80, you will get back your premiums paid. So we're finding that there are various proportions and various customer segments who choose each of these options. So thanks to that, there is really no excuse for a person not to buy term insurance anymore.
Let's talk a little about the age and how that's important. There are a lot of young people watching this show, and you said that at 21 you were, I would imagine, way ahead of your time, because even though you had somebody coming and advising, or maybe you just bought a money back and that didn't really give you much of a cover, but even so at 31 you went and got yourself a cover. Most people don't do that. And how important is it? You mentioned that millennials are increasingly buying more of term insurance, but how important is it to buy it when you're much younger rather than delaying it? What's the difference?
That's a very interesting point. Today's millennials are actually causing a huge demographic shift in the country as a whole. From a total population of around 55 crores, the millennial population, which means those who are today aged between 25 and 40, are going to increase to something like 85 crores by 2025. So in the next 5 years, you'll find that the workforce of India, from being 45% millennials, is going to be 65% millennials. Their average FMCG spends is going to increase 3x in this 5-year period. So they are the India who earns, and they are going to be the India who spends. Now, term insurance is really meant for that segment, and we are finding that already, thanks to awareness, thanks to the smartphone, thanks to technology bringing the world together, people's awareness on insurance as well as protection has increased. And that's why we are finding that millennials' penetration of life insurance is double that of Gen X. So that's the good news. How are the millennials today searching? It looks like they're going into Google. In fact, Google research describes today's India's millennials in 3 words. Curious. What do you mean by curious? There are something like 10 crore searches on Google for insurance-related subjects.
10 crores.
10 crore searches this year, which is the highest lifetime record. So even Google is surprised as to how come so much searches are happening on a subject as traditional and conservative as insurance. Number one. So they are curious. Second is they are demanding. The customized searches that are going in by the millennials has increased by 50%. For example, the word term plan in the last 1 year, the increase in searches has been up to 69%.
Okay.
There's a 2.5 times increase in premium calculator usage by smartphone users in the last 1 year itself. So it looks like they're curious, they're demanding, and by the way, they're also quite impatient. So if your page load time is more than 3 seconds, 53% of your users would leave it and move on, because 63% of India's searches happens through the mobile phone. So these curious, demanding, and impatient millennials are actually looking for their solutions. They seem to know what they want. In fact, 91% of them say that they will take their own financial decisions. It won't be like how I was when I was sold my first policy by a friendly agent advisors at the recommendation of my dad. That is gone. So they will look, they will search, and they will buy from their own. The good news for the life insurance industry is that 70% of the millennials feel that life insurance is a preferred investment and protection option. So that's the good news for the sector as well. So I wouldn't be surprised if we were to see a second sunrise in the sector as we turn 20 as an industry.
Vishy, we talked about how it's good to buy term cover when you're really young from a cost perspective. But again, you mentioned the point that you bought your first term cover when you were 31. If you were to look at the pricing of term insurance, given the rather competitive nature of the industry, even though you operate in a highly regulated industry, one doesn't see, the pricing having gone up too much over the last, 15, 20 years.
Yes.
Can you tell us a little about, from an affordability pricing point, how does India fit in on term cover prices vis-a-vis the global markets?
Well, interestingly, over the last decade, the term prices have crashed in India. So it's the best time to buy right now.
Okay.
It's at an all-time low since the sector
Can you
opened up.
explain crashed? I mean, how?
So what's happened is with pricing getting finer and finer thanks to competition and regulation not really controlling pricing, market forces have taken over.
Okay.
So each one wants to outdo the other, and bulk of the risks are actually being sourced to the reinsurers.
Okay.
So the global reinsurers are actually backing a cover. So typically, if one were to buy a 1 crore term cover, 80% of that cover is actually reinsurer borne, while maybe 20% of that cover would be borne by the insurance company themselves.
Okay.
So with this price market competition going on and reinsurers also falling on top of each other to win market share, they have enabled very low prices.
Okay.
Also, India doesn't have too much of an experience as far as these large term covers are concerned, because the average term cover today operating in India is close to 90 lakhs.
Okay.
That's the average. While that of the current state is close to only about 3 lakhs. Okay. So the current savings plans and current products which are being sold, which are non-term, and that history
You
is
mean the
is long.
savings investment products?
Yes, the traditional plans and
that's
the unit-linked
it's 3
plans.
lakh there, the
It's about
cover,
3 to 4
average.
lakhs is the average.
And for term covers, it's
For the
about
term
90
cover
lakhs.
is 90. So it's a different order altogether.
Absolutely.
And the risks are very, very high here. So because the experience is not known, some assumptions have been made. So let me try to share it in simple terms.
Sure.
So typically a term plan is shared in such a way that you take an estimate as to how many deaths you would see from a portfolio in a year. So currently it is priced at about around 10 deaths
Okay.
to occur in 1 year's time
Okay.
from 10,000 policies issued.
Okay.
That is where India is operating as far as the Indian assured life mortality is concerned.
Okay.
Having said that, term prices today are priced much cheaper.
Okay.
They are priced at close to about 2 deaths per 10,000. So the kind of financial underwriting required and the kind of medical underwriting required, because both these elements ensure your mortality and morbidity are within limits. So that's how the pricing has been determined. However, as the experience evolves, so term pricing now has an experience of around 5 years, 5 to 6 years in India. That is still very young and very raw. So in the next few years, one would see what is the kind of mortality experiences that we are experiencing. Because as I shared, typically the payout on an insured event happening, such as a death, is about 800 times the premium you pay if you're for those who are in the 30s, and about 500 times the premium you pay if you're in your 40s. So you can realize that the insurer can get a huge amount of loss in case of a mispricing of this, and so will the reinsurer. So there could be a price correction, because typically when you look at it, this kind of price is not offered in a place like Dubai or Singapore or even North America.
Okay.
Because those countries have had a history of term pricing, and they have a 20, 30, 50-year history of term pricing. They're aware of what is the kind of mortality that they are experiencing. India is still young, and the mortality tables today are working on assumptions. So if you ask me, my personal bet is the prices will go up.
They will go up?
Yes.
And that's because you feel that they've just hit rock bottom, it's becoming unsustainable at these numbers, or is the reason that somewhere the regulator is going to step in and say that, look, I think you can do with slightly higher prices, because it's also concerned with the health of the insurance company?
Well, I don't think the regulator needs to step in, not likely, because between the insurer, the reinsurer and the marketplace, there is enough play happening already, and there are upward pressures to increase prices, because when the Indian assured life mortality, which is 2006-2008 data, which is being used by most insurance companies today, and this study is done every 5 years, by the way. So the 2012-2014 data is also available, but it's only shown a very minor increase, very minor decrease in mortality, just about 6%. So that is inadequate to kind of sustain the prices that we're currently offering. So based on those assured mortality tables, and if they are here, the term pricing of most companies in India today are at 1/5 that level. So despite the kind of financial and medical underwriting which is done in term policies, in my estimate, I think the end story might be somewhere between these two. It's not likely to be here. It's not likely to get here. It might be somewhere in the middle.
Vishy, what's the best way to choose the right term cover? Because, while you mentioned it's a competitive industry and the pricing is pretty much similar, but then when you go to an aggregator, you see a huge difference in X policy versus another policy. So while pricing is one of the reasons, criteria that people look at, but for someone who is going ahead to choose their first term cover, what are the 2 or 3 things they should keep in mind?
Well, the 3 things that one should keep in mind while buying a term cover are as follows. First is buy the one which is most suitable to you. So understanding your needs is most critical. For instance, we are still seeing that several customers end up buying a fixed sum assured, such as 1 crore or 50 lakhs, without ascertaining how much of life cover would they need given their income, given their age, and given their life stage. So I find it quite interesting to know that if all customers are choosing a similar kind of sum assured, does it mean that their life situation is the same? The answer obviously is not. So understand your own needs. We have, for instance, on our website, a real value calculator, which in 30 seconds will ask you a few questions and recommend to you the right kind of sum assured that you require. So that is number 1. Number 2 is the kind of riders and options which are available today is a plethora. You can choose waiver of premium for disability. You can choose a critical illness rider. So if you know that you have a family history of such kind of incidences, or you do not, you are aware of such issues, it might be a good idea to take those riders and attach them to your base plan as well. Besides this, what we are seeing is that customers are now getting more evolved. So not just the price, they are even looking at the claims paid ratio of insurers, not just for 1 year, but for the last 3 years, 5 years, and so on. So they're looking at, is the promise that is going to be made by the insurer post underwriting the term plan going to be met or not, and what is the past history telling us? So looking at the claims ratio of the insurer is a big factor. We're also seeing that the purchase experience overall in terms of online term purchase is a big determinant of how many people end up buying an insurance policy or not. So the customer experience, the claims ratio, and your own suitability of the product is probably the 3 elements that one needs to look at before purchasing a term plan.
Do companies like yours also offer a top-up option? Because I'm asking this, you may be 25 years old, you may need maybe a 50 lakh cover, but by the time you're 45, you need much, much more than that. Can I just top up my cover on my existing policy, or do I have to go and buy a fresh policy every time I need to increase my cover?
We do have such options. It's a guaranteed insurability option, where today you can pay an X premium and get covered for Y, but tomorrow as your life stage changes, you might have a child, you might have children, you might purchase a house, and so on. So you can keep upgrading it and pay the adequate premium for that, but your underwriting and for your health will be done upfront. At the point of purchase. So yes, those top-up facilities are available.
Okay. One of the areas where there's been big innovation over the last 10 to 20 years has been, on the health side. You did mention about the critical illness riders. I think from just purely covering life to also being able to cover the event of diseases, which could really set you back by quite a bit. Diseases like cancer or a heart disease and stuff like that. What are the innovations on that front that have happened? Do I have to buy a term cover and buy a rider, or can I just simply buy a health cover as well for a certain set of critical diseases?
Well, it might be a better idea to buy it as a rider because one really can't choose the way these illnesses or these risks would hit you. So buy a base plan, and purchasing rider makes it cheaper because the rider has a cheaper cost per sum assured cover. So it covers a plethora of critical illnesses, and it also gives you other options including disability covers. So you can purchase those because one doesn't know what could happen in future to make sure that your term plan is future proof. So I would always recommend a rider approach rather than buying several standalone plans.
And has the range of diseases that are covered only increased over the years, or is it still restricted to a few diseases?
It is significantly increased, and as the reinsurers and insurance companies are getting exposed to those kind of experiences, we are increasing the number of covers. For instance, we have a plan now which covers something like 40 critical illnesses, and going forward I only see this number increasing.
And just to clarify to our consumers, how do these work? You get a lump sum payout at the time if you're diagnosed with a disease?
There are options available, either a separate lump sum payout or even an accelerated cover, an accelerated payout of your sum assured of your term plan. So you can do that because then your price becomes even lesser. So if you buy a term cover for, let's say, 1 crore, you can buy a critical illness cover of, say, 30 lakhs, and you can get 1 crore. From the 1 crore figure, you can get the 30 lakhs accelerated on diagnosis of a critical illness affecting you.
What has been the impact of digital on your business? You made the point earlier that there are a lot of millennials who are searching and who are trying to become more aware about insurance, and many of them are even going out and buying the policy. Are they doing it more increasingly online because that's the preferred mode for them? How is that changing pricing, for example, if I'm cutting across and not going through an agent, coming directly to the company and buying a product or going to an aggregator? How is that changing the pricing for a customer? And your own business, how is that being affected by digital?
Well, the big phenomena we are seeing as far as millennials are concerned is they are researching online. Now, most of them, by the way, prefer to purchase offline.
Is that so?
Yes. But a few of them prefer to purchase online. The numbers are not publicly available, but my guess is it is something like 70-30. 70% are researching online and purchasing offline, and that's what Google research is also vindicating, that this ROPO phenomena among the millennials is to the tune of 70%. However, the balance 30% must be going online. For Max Life and our experience so far is that nearly 1 in 5 to 1 in 4 policies are being purchased online in any given month, either through a web aggregator or directly on our website. So that's the experience we are seeing. Digital has been a core of our strategy. We have invested in a digital center of excellence, and we believe that digital is not just to the consumer, but digital is also to our intermediaries and our agent advisors to help them remove the friction from onboarding a customer and even targeting the right profile of the customer upfront. And we also believe that digital has a big role in reducing the friction of an employee's life cycle from the stage of hiring to the stage of retirement. So we have 3 big pillars as far as our digital strategy is concerned. One is what we call the B2C, which is from our business to the consumer. The second is B2B, which is from our business to our intermediaries, which includes banks as well as our agent advisors, and B2E, which is from our business to our employees.
It's been a pleasure talking to you, Vishwanand. Thank you very much for joining us here and sharing your thoughts with our viewers. Thank you.
Thank you, Vivek. Thank you.
Well, if you've gone through this interview with V. Vishwanand, one thing is very clear: get yourself a term cover as soon as you can. The prices are extremely low right now, likely to go up. But more than that, it's something that is an integral part of your financial plan. So go ahead and get yourself a good term policy.